Mr. Manoj Menon, the head institutional equity of equity research at ICICI Securities, joining us on the show. Manoj, hi, thank you so much for your time. And first, before we start talking about some stock-specific action, give us your sense on the broader jewelry space. How do you think the jewelry earnings are going to look like in Q1? They're just around the corner. You've got gold prices softening. You've also got the custom duty at play. Give us your sense.
Hi team. Thanks for having me. If you actually look at the jewelry sector from a longer-term point of view, not just the first quarter, what has been a trend which has been observed over the last, I would say, 5 years is that the consumers, willingness to, purchase at every price point, right? For example, 2 years back, let's say per gram 22, carat was 7,000 rupees, right? Currently, it's about 13,000. I think the consumers have definitely shown a willingness to redirect share of wallet more to jewelry versus a lot of other consumption categories, right? And that trend is positive. Point number two, a few years back, the government implemented hallmarking, which also essentially meant a significant formalization. Point number three, growth capital availability for the jewelry industry, in our opinion, has improved significantly, particularly working capital financing, etc., which also meant that most jewelers, were able to either tap markets or access, other debt funds, etc., for expansion. So it's sort of a situation where there is demand, there is supply, on both sides of the retail spectrum. Coming to the short term, I heard your opening remark about Kalyan's, let's say the 1Q was a tad lower, etc. Look, I think I mean we can't begrudge somebody who reports a 38% revenue growth, right? It itself, pretty good. I don't know what the expectation was, but I think it was pretty decent number. Titan's 39% in jewelry was another, good one. So we reckon these are actually good performances, given the fact that in the June month specifically, there were 28 days of Adhik Mas, right? And during that time, typically in certain parts of India, consumers really don't buy. So you've got to see this current quarter revenue growth in the context of, companies having this headwind as well, and a high base also.
Manoj, also curious to know, so all well, in terms of demand, things look strong on ground despite Adhik Mas. There was a very good demand. I take your point on all of that. Talk to us about what happens on the inventory front. There'll likely be a revaluation, which will play out. Believe that will be a large knock on the P&L this time around?
No, it is a one-time loss for the industry, right? Typically, because you can't hedge a customs duty movement, right? So when customs duty was increased, obviously you get a one-time gain and you'll have a one-time loss. Difficult to quantify the number, but typically, historically, what we have seen is whenever there is a customs duty change, the companies do quantify or qualify that number, in the conference call.
One thing is the customs duty. The other thing is also the price of gold, right? That has taken a bit of a knock as well during the quarter.
Yeah.
And that will start to reflect on the P&L of some of these companies. So the correct way is to probably exclude that number and then look at profitability and EBITDA. How should one look at the numbers if one were an investor at this point of time?
Yeah. 2 points there actually. First is the two stocks in jewelry space which we cover is Titan and Kalyan. So my comment I'll restrict to those companies. These two players actually hedge, almost 100%, right? Or rather 100% actually. So to that extent, gold, whether going up or going down, doesn't really have any cash flow impact as far as, these top two players are concerned. The point actually to note here is, from a consumer point of view, let's say if gold becomes directionless or volatile, that's actually the worry or rather the risk, for the rest of the year. One can have a point of view on, because for example, we don't really take a strong point of view on where gold will be commodity, etc., etc. The point is, if gold becomes directionless or volatile, historical patterns suggest that consumers tend to postpone consumption. And that can have an impact on same-store growth, incrementally speaking.
Okay. Manoj, basis the commentary that we've seen coming in from most of the big players in Q1, we're seeing a shifting of trend from a pure gold to studded and also from very heavyweight wedding jewelry to now lightweight everyday jewelry. What I'm trying to understand is as this ticket size reduces from, the heavyweight jewelry to lightweight, how does that impact volumes? Because on one hand, the cost is coming down. You've got gold prices that are in favor of the consumer. Does that automatically mean volumes go up if ticket size is going down? Would that correlation make sense?
Interesting one. So I'll tell you, look, there are a lot of moving parts which are out there happening in the market currently. See, there are parts of India, for example, for a wedding, the volume gold which you purchase, actually matters, right? But there are certain parts of India, certain parts of consumption pattern where it's actually the overall value, right? You adjust the volume accordingly. Point number two, what we've also seen, in the last, I would say, 1 year is that, typically consumers buy 22 carat in India, right? All of us are 916, purity, 91.6% purity. Now, companies actually has been, I would say, publicizing, lesser than 22 carat, whether it is, 20, 18, etc. Right? I mean, so I think to that extent, there has been activities, actions by the companies to, let's say, improve affordability. Second point, what I have noted in the last couple of years is that historical pattern suggests that every unit of gold price increase results in a certain volume decline, right? I mean, because there is a price correlation there. What we have noted in the last couple of years is that the reason these companies are able to grow at 30-40% is because, the volume elasticity seems to be not as much the adverse effects, not as much as the historical pattern, which actually tells you, as I was telling you earlier, that the consumers are essentially kind of displaying a particular behavior of redirecting spends from other consumption categories to particularly to jewelry. So what I'm saying is all good, except in a scenario where if gold becomes volatile, it can become a headwind for consumption in the short term.
And Manoj, for how long do you think this headwind will be at play? And if I remember correctly, about 2 years ago, when this entire custom duty regulation had happened, it's happened recently, right? And you had an impact of about 100 to 110 crore for Titan in one of their quarters. I believe it was in the middle of the financial year when this had happened about 2 years ago. Do you think the quantum of the impact could be similar this time? I know you said it's difficult to put a number, but directionally, what should we expect on that front?
Just to clarify, actually, kind of, I commented earlier on the customs duty. I just want to make a small amendment to that and clarify this as well. See, what we've actually seen is a customs duty increase. Hello?
Right? Yes, go
Right,
on,
which
we can
actually
hear you.
means, yeah, which actually means it's an inventory gain, right? What I'm saying is that, look, honestly, we don't really worry too much about inventory gains or inventory losses here because, through the cycle, as I'm saying, right, let's say when custom duty goes up from 6 to 9 to 12 to 15, there is a one-time inventory gain and companies do call it out and we treat it as a one-off. And let's say if custom duty reduces from 15 to 12 and reverse back, right, etc., there will be a inventory loss as well, right? Which is again one time. So it kind of through the cycle, when you think about it, right, it evens out, from a cash flow point of view, so which doesn't really affect my valuation. Second point is you treat it as a one-off and see, right? And as I'm saying, historically in the results conference calls, companies have called out this one-off. So there's nothing really to worry about the disclosures as well.
Manoj, last off, if one were to play this theme right now at the current juncture, given everything that's playing out in markets, would you play it through Titan? Would you play it through Kalyan? Are both looking equally attractive? And your short thesis on why you would play it the way you would.
Yeah. Look, I think there are industries like jewelry, industries like, let's say alcohol beverages, so there are value retail, paints, for example, for this year. So there are a lot of industries which has got, structural tailwinds, right? I mean, so the first point is to actually pick a subsegment which has got tailwind. Jewelry happens to be one. Now, we actually like both, Titan and Kalyan. But if I'm to pick one out of the two, right, the fact of the matter is that Kalyan is far cheaper from a multiple point of view and performance pretty much in line with the market leader as well. So I'm not negative on Titan, just be clear about it, right? Because it's such a stellar performance over a very long period of time that it is one of the few, I would say, discretionary companies in India which has actually managed to compound cash flows, mid to high teens for a very long period of time, right? So it's actually an FCF machine with a lot of growth as well. Kalyan is a younger company in the listed space, but given where the valuations at this point in time, slight edge of Kalyan over Titan, but equally, I would say like both, but yeah, Kalyan slightly over Titan, marginally.
Understood, and that puts a lot of stuff about the sector into perspective for us. Manoj, thank you so much for your time today, and thank you for sharing your insights with our viewers.
Thank you so much. Good day.
Thank you so much.